computed, right? So we computed the historical EBIT growth rate, okay? Historical EBIT growth rate. Shall we use historical growth rate as we go into the future in projecting our growth and cash flows, right? Shall we use it? Or shall we use the expected the growth rate coming from economic fundamental relations, which means your expected ROC times expected reinvestment rate, okay? Oh, it's so different from what we used to have. You have this expected sign. Well, it's the same thing, okay? It's the same thing. We are doing all estimation based on our expectation, right? So don't get scared. We mean the same thing. ROC times reinvestment rate, right? So shall we use this kind of ROC times reinvestment rate to assume our EBIT growth rate when we do the cash flow projection? Or shall we use something else, right? And then also, how many stages of growth do we have to assume? Do we have to impose, right? Is a valid question that you should address, right? So what do? How about those economic fundamental relations, right? Here, the previous historical growth rate, we had some good idea about this, the first bullet point. Second bullet point, we don't have good idea about it. Okay, so let's address those second bullet point to have some idea about it. Now, for that purpose, we need to have good idea about their expected ROC and expected reinvestment rate. We'll do one by one. Now, yes, ROC, right? Historical ROC looks like this, okay? Disney, Amazon, Netflix, Google. Their ROC, wow, Google's ROC was crazily high before, so it's ruining our picture. It's like we cannot see precisely about what's going on over here. So why don't we take out the Google, okay, in the next slide. Okay, so just focusing on these three companies, here is Netflix, ROC, and competitors. You see that there was ROC was going to 50% rate and then plunging it back to 5% rate and then rebouncing it in a consistent manner to like 10% rate, okay? In contrast, Disney has been achieving the ROC is not that high, but stable ROC of about 10% to 15% range, right? I mean, this may be the reason, this may come from the fact that the Disney is a well-established, long historied company, whereas Netflix is a young company, so you have an initial bumping period, right? But maybe it's going to a right trajectory ever since 2012. And then why did they have this kind of fall? You may be interested, so I'm going to do some kind of DuPont analysis kind of things to address those issues. Why did they have it? The kind of things a little bit. And Amazon.com, their ROC has been declining. Why is it declining? Partly because they get older. A younger stage, you can achieve high efficiency because you are nimble, okay, where you can be very flexible moving around. But as you grow in size, you're less flexible. You get fat or heavy, so it's more difficult to achieve such a high level of ROC. More rather stable ROC you can achieve later on. But that's one thing you can notice over here. IC turnover, so I'm doing some kind of a DuPont analysis kind of things. One of the things was turnover, right? IC turnover, sales divided by invested capital. So if you compare all these four companies, it looks like this. Netflix is their purple line over there. And then it's been declining ever since 2012, right? But it's nowadays reasonably together with the rest of the guys, except Amazon.com. All right, 3.35 times. Now the next one, NOPAT margin. NOPAT margin looks like this. Netflix is your green line over here. Okay, NOPAT margin used to be negative, hugely negative when they were young. Of course, in your young stage, you have to consume a lot more, or your expense has to be a lot more because you need initial investment. Okay, and similar things happened in Amazon.com. If you look at it, right, they were loss-making companies in 2000, early 2000 or 1990s, right? Just like Coupang that you see these days. Similar picture, can you see it? All right. So Coupang projections, if you have to do it, you can impose some kind of Amazon.com kind of story, and Netflix is following similar pattern, right? Eventually, Amazon and Netflix, they entered into positive realm, okay, after certain period, right? So that's one thing to notice. Afterwards, they've been performing with a high, not a high, but relatively okay margin over there. And recent history, if you cut this by and focus on this one, it looks like this: profit margin, net NOPAT margin since 2012. Netflix is this green line, okay, in 5 to 7% range maybe. And one thing you can see is that from here to there, it has been consistently going up, except for this period over here, 2012. So the 2012 ROC plunging, primarily it was driven by this guy, okay, the net margin. That's something we could find. Anyway, NOPAT margin, we could find it, average one. So ROC drastically deteriorated in 2012 from 47.55% to 3.02%. You can read it off, okay? This is self-evident, so go ahead and read it. Sales growth graph clearly tells us that Netflix was in a fast growth trajectory even before COVID-19. Why do we say this? Because our primary question is, once this COVID-19 is over, okay, what will happen to Netflix? Would it stop growing? Which means, is the high promising stock price of Netflix purely driven by, 100% driven by COVID-19? Or is it driven by its natural growth in the first place, and COVID-19 is just adding a little blip over there? Okay? If that is the case, if this is the case, right? If this is the case, then you may have much better future for Netflix, right? On the other hand, if, did I say it right? If the high price of Netflix is primarily driven by COVID-19 only, then you should suspect that you should suspect that the Netflix is in bubble. So much so that once the COVID-19 is over, then Netflix price will plunge down, right? So this history give you some good idea about the growth trajectory of this company, right? Visualize the data and then you can see it, right? COVID-19 would spur the fast growth even further for a while. Of course, COVID-19 will be there in a couple of years or maybe 5 years, right? Which would create a spike and reversal in the short run. But even before that, there seems to be like a baseline growth, fast growth. But there are some tricky parts. How about historical reinvestment? Okay, to get to that of economic fundamental relations, the other missing part, the last missing part, is reinvestment rate. So I want to look at the historical reinvestment rate in the following charts. So reinvestment historical figure. Okay, I downloaded it. I will give you this kind of data to you over the Google Drive, so you will be able to play around with whatever company that you are interested in. So in reinvestment rate, Netflix, here's NOPAT. The tax rate that I just assigned is 0% when it is negative and 35% when it is positive, all the way down, just for simplicity's sake. But you can assume a more complicated structure for that one later, but you know, in any case, we are estimating it. And then change in working capital year over year, I calculated it, and NCE, I calculated those, and then investment amount, which is the addition of these two columns, right? Addition of these two is shown over here, right? Sometimes negative, sometimes positive. Okay, investment amount. What do you mean negative investment? Which means there may have been some sales of your asset to other companies. Unnecessary asset, sell off and get the cash. That's negative investment. Divestiture. Sometimes it happened. Okay, in his history. Notice that our reinvestment rate was based on assumption that both numerator and denominator are positive, not S, right? Positive. Well, what if any one of this is negative? The ratio itself becomes meaningless. Okay? A lot of the ratio analysis that we do becomes meaningless when it has negative value. Case by case, 케바케, okay? But surely reinvestment rate, okay, has this kind of limitation. So what do we do? Here's my solution, my version of solution. When any of these two are negative, either numerator or denominator, negative, well, the measure is meaningless for our purpose. So compute the ratio only when both numerator and denominator are positive. I keep on putting S over there. This is obviously one of those Konglish, right? A broken English symptom. What can I do? I was educated in Korea. Okay, so that's that. Now, if you look at this reinvestment rate in Excel spreadsheet that I'm going to give you, it looks like this. I use if function and say conditions. First condition, if C4, this notepad, if this guy is negative, if this guy is a positive, then do the following. Okay. The second logic is this. If F4, this investment is positive, then do the following. So one condition, two conditions satisfied, compute the ratio. Otherwise, leave it as blank, which means any of these two are negative, leave it as blank, and then the result looks like this. Nothing shows up. No number. No number, no number. But yes number, no number over here. Okay? So that's how I would do it. And then reinvestment rate is calculated using this. And then if you do a bar chart like this, bar chart, right? It looks like this. Okay, sometimes the reinvestment rate is way high, 3 times or more, crazily high amount of reinvestment happens. When you're young, you have to reinvest a lot more. Okay, when you're old, you're not. Plus, the investment is like has a lumpy fashion, lumpy pattern. So the companies don't invest in an equal manner, like invest the same amount over year. They don't do it like that. They do it like invest in 1 year and then no investment for the rest of the 10 years, and invest in 1 year and then no investment for the rest of the years. Lumpy. Okay? So you have to assume this kind of, but so the challenge is you never know when the company will do this crazy amount of investment going into the future. Would it be this year or next year or 5 years later? We don't know. It's gonna be lumpy anyway. So what do? We do average way. We say normalize it. Normalize, take the average. So as if it were equal amount of investment going into the future will happen. But we have some understanding that it will be lumpy. Okay? So take the average and assume it to be smoothly happening. So that's what we're going to assume in the cash flow projection. Right. Right. That's what you see in the green box. Yeah. Value of the ratio is not missing, right? And then one thing is that, oh, statistically speaking, you're doing something wrong, Andy, because you're choosing to include the observations when it is positive only. You systematically excluded these people, these observations. So there must be some selection bias. I know, but there's no perfect scientific way of doing it. Okay, so with that limitation, we just move on. Okay, it's better than nothing, right? Better than nothing, and still better than working with the situation from negative, computing the reinvestment rate with something negative denominators and positive denominators, something like that, right? So that's still better than doing. This is still better, right, than anything else. Now, how about reinvestment rate? Yes, so take the average of these guys that I'm missing. Take the average, 0.58, right? Now what? I got all this information about economic fundamentals. Now I just have to multiply it by average ROC, 15.32%, to get to the growth rate, okay? Justified by this ROC and reinvestment rate historically. So my best guess or average expected EBIT growth rate based on this fundamental is 8.83 percentage point, right? And you will realize, this is a lot different from the historical average growth rate of 50 to 60% range. We could expect about 50% growth over the next 5 years, okay? Then a declined growth rate of 8.83%, which is coming from this, over the following 5 years. And then afterwards, we could expect the growth rate to be the same as world GDP growth rate of 2.5%, okay, which comes from World Bank data, okay? Why 2.5? Why world GDP? Because Netflix is a global company. They're selling it to the world, right? And then they cannot grow faster than the world GDP growth rate in the infinite horizon, okay? Mathematically, that is true, okay? Infinite horizon, if you're growing faster than world GDP growth rate, that means at some point you will be Netflix will be the dominant company in the whole world. The whole world will be built around the Netflix empire, okay? You cannot imagine that kind of thing. So its growth rate, Netflix growth rate, has to be somewhere close to the world's GDP growth rate or lower, okay, not bigger. So that's long run growth rate, okay? But in the middle, over the 10-year horizon, 5 years, 50% initial 5 years, and then 8.83% for the next 5 years, okay? That's what we're going to assume.